This presentation will provide all possible education-related savings and tax implication as on the 6th of June 2022. Disclaimer: accuracy-related penalties. Any tax advice in this communication is not intended or written by us to be used, and cannot be used, for the purpose of avoiding penalties that may be imposed by any governmental taxing authority or agency, or promoting, marketing or recommending to another party any matters addressed herein. The opinions and analyses expressed herein are subject to change at any time, as are statements of financial market trends, which are based on current market conditions. Any suggestions contained herein are general, and do not take into account an individual's or entity's specific circumstances or applicable governing law, which may vary from jurisdiction to jurisdiction and be subject to change. Any third-party information contained herein is from sources believed to be reliable, but which we have not independently verified. Past performance is not indicative of future results. Investments in securities may lose value, and fees, charges, and taxation can have an adverse effect on investment returns. This material is not intended as an offer or solicitation for the purchase or sale of any financial instrument. No warranty or representation, express or implied, is made by Shore Financial and Tax Services LLC, nor Shore Financial and Tax Services LLC accept any liability with respect to the information and data set forth herein. Distribution hereof does not constitute legal, tax, accounting, investment or other professional advice. Recipients should consult their professional advisors prior to acting on the information set forth herein. For your individual case, schedule a consultation by visiting https://shorefintaxsvs.com/contacts/. Coverdell Education Savings Accounts, ESA. Coverdell Education Savings Accounts. Coverdell Education Savings Accounts, ESA, are trust or custodial accounts designed solely for the purpose of paying the trust beneficiaries qualifying education expenses. To encourage education savings, these ESAs provide tax deferral on account growth as well as the possibility of a tax-free distribution when used to cover approved education expenditures. Contributions to an ESA, on the other hand, are not tax-deductible. Contributions to an ESA can be made for a beneficiary under the age of 18 or a special needs beneficiary of any age. Contribution eligibility is phased off at higher contributor income levels, with a maximum annual contribution of $2,000 available. By the time the specified beneficiary reaches the age of 30, ESA funds must have been spent for eligible educational costs. Unless the selected beneficiary is a special needs beneficiary, any ESA money not spent by the designated beneficiary's 30th birthday must be distributed within 30 days of the designated beneficiary's 30th birthday. Coverdell Education Savings Accounts. ESA money can be transferred to another ESA for the same beneficiary or a family member of the former recipient. Losses incurred on investments in a Coverdell ESA for tax years beginning after 2017 and before 2026 are not tax-deductible due to the abolition of miscellaneous deductions subject to the 2% floor established by the Tax Cuts and Jobs Act of 2017. Education Savings Bonds Program. Education Saving Bond Program. If you pay qualified school costs at an approved education institution and fulfill federal income tax filing status and income requirements, you may be able to deduct some or all of the interest you pay on certain Series EE and Series 1 bonds. Tuition and fees, payments to an eligible tuition program, and contributions to a Coverdell Education Savings Account are all examples of acceptable education costs, ESA. And qualified educational institution, for the purposes of the Education Savings Bond Program, comprises practically all accredited public, nonprofit, and proprietary post-secondary institutions in the United States. For the purposes of the program, qualified education expenses must be adjusted. Adjusted qualified education expenses are those that have been reduced by tax-free benefits received, such as the tax-free portion of scholarships and fellowships, expenses used to figure the tax-free portion of Coverdell ESA and qualified tuition program distributions, any tax-free payments received as education assistance, and any expenses used to figure the American Opportunity and Lifetime Learning credits. However, for the purposes of the program, gifts and inheritances do not lower qualifying school expenses. Education Saving Bond Program. All bond interest earned may be tax-free if adjusted eligible school expenses equal or exceed the total amount of the proceeds of cashed in bonds. Only a portion of the interest may be tax-free if the total amount received exceeds the adjusted eligible school costs. Although a taxpayer's eligibility to omit savings bond interest may be decreased based on income, it is removed at specific higher income levels. Education credits. Education credits. Taxpayers can take advantage of two comparable tax credits to help defray part of the costs of higher education. They are known as the American Opportunity Credit, formerly the HOPE credit, and the Lifetime Learning Credit, and they are similar in some ways and dissimilar in others. At increasing levels of income, both tax credits are tapered away. For qualified school expenses paid for each eligible student, a taxpayer whose income does not exceed the threshold at which the phase-out begins may be able to claim an American Opportunity Tax Credit of up to $2,500, part of which is a refundable credit. Eligible taxpayers can also claim a non-refundable Lifetime Learning Credit of up to $2,000 per tax return for appropriate education expenses. Education credits. A taxpayer must complete 3 requirements in order to claim one of these education tax credits. 1. The taxpayer covered qualifying higher education expenses. 2. The taxpayer's education expenditures were paid for a qualified student. And 3. The taxpayer's spouse, or a dependent stated on the taxpayer's tax return as an eligible student. If any of the following apply, a taxpayer is ineligible to collect the tax credits. The taxpayer is married filing separately. The taxpayer is listed as a dependent on another person's tax return. The taxpayer's modified adjusted gross income, MAGI, exceeds a level specified for the particular credit based on his or her filing status. Or the taxpayer's modified adjusted gross income, MAGI, exceeds a level specified for the particular credit based on his or her filing status. For any part of the tax year, the taxpayer or spouse was a non-resident alien, and the non-resident alien did not elect to be classified as a resident alien for tax reasons. Education credits. Although tuition and student activity fees, if paid to the institution as a condition of enrollment or attendance, are acceptable education costs for both tax credits, the classification of expenses for books, supplies, and equipment varies depending on the credit. Costs for books, supplies, and equipment required for a course of study are considered qualified education expenses for an American Opportunity Credit, whether or not the books, supplies, and equipment are purchased from the educational institution. However, payments for books, supplies, and equipment required for a course of study are only deemed eligible education expenses if they are paid to the institution for a lifetime learning credit. For the purposes of the credits, taxpayers must deduct any tax-free educational help or refunds from their eligible education expenses. Education credits. Colleges, universities, vocational schools, and other post-secondary educational institutions are among the eligible educational institutions where qualified education expenses must be incurred in order to receive either tax credit. For the purposes of the tax credits, many education expenses are not considered qualifying education expenses. Expenditures for insurance, medical expenses, including student health fees, room and board, transportation, and other comparable personal, living, or family expenses are not considered qualifying school expenses. Education credits. Depending on whether education tax credit is being evaluated, the definition of qualified student, as used in conjunction with the tax credits, differs. For the purposes of the American Opportunity Credit, an eligible student is one who 1. Did not have expenses that were used to figure an American Opportunity Credit, or its predecessor, the HOPE credit, in any of the previous 4 tax years. 2. Did not have expenses that were used to figure an American Opportunity Credit, or its predecessor, the HOPE credit, in any of the previous 4 tax years. 3. Did not have expenses that were used to figure an American Opportunity Credit, or its before the current tax year, had not finished the first 4 years of tertiary education. Beginning in the current tax year, was enrolled at least half-time in a program leading to a degree, certificate, or other recognized educational credential, and as of the end of the tax year, had not been convicted of any federal or state felony for possessing or distributing a controlled substance. Education credits. Depending on whether education tax credit is being evaluated, the definition of qualified student, as used in conjunction with the tax credits, differs. For the purposes of a lifelong learning credit, an eligible student is simply someone who is enrolled in one or more courses at an eligible educational institution. The lifelong learning credit is available for all tax years, unlike the American Opportunity Credit, which is only available for 4 years. Education credits. The maximum tax credit available to taxpayers is determined by the credit being claimed. For each eligible student, the maximum American Opportunity Credit is $2,500, because the benefit is equivalent to the sum of 100% of the first $2,000 and 25% of the next $2,000 of qualified school expenses. The taxpayer must have incurred at least $4,000 in qualified education expenses to receive the maximum American Opportunity Credit. For most taxpayers, 40% of the American Opportunity Credit is refundable. The Lifetime Learning Credit is worth up to $2,000 per return, or 20% of the first $10,000 in eligible education costs. For the same student, a taxpayer cannot claim both the American Opportunity Credit and the Lifelong Learning Credit in the same year. For higher income taxpayers, the maximum amount that can be claimed under any tax credit is lowered, and it is eliminated at certain modified adjusted gross income levels. The MAGI levels at which credits are phased out are determined by the taxpayer's filing status and the credit being claimed. Education scholarship or fellowship. Scholarship or fellowship. Scholarships, fellowships, need-based education grants, eligible tuition reductions, as well as student loan cancellations and repayment aid, are all possible tax-free options for taxpayers. A scholarship or fellowship is tax-free only if the taxpayer is a degree applicant at an eligible education institution. B. The scholarship or fellowship is used to cover legitimate education expenses, and C. The monies received are not remuneration for teaching, research, or other services. A scholarship or fellowship, on the other hand, is taxable if it is used to cover non-deductible expenses, if it is received for services, or if it is a prize. Furthermore, any portion of a scholarship or fellowship that represents remuneration for teaching, research, or other services required as a condition of receiving the scholarship must be included in income. Education tuition reduction, pause. 4. Tuition reduction. Taxable or tax-free tuition reductions are possible. A tax-free tuition decrease is referred to as a qualifying tuition reduction. If a tuition reduction is taxable, the taxpayer is viewed as receiving a payment in the amount of the tuition reduction and paying it to the educational institution on the student's behalf. Education student loan interest, pause. 4. Student loan interest. Although non-mortgage interest is not normally deductible, taxpayers can take a special deduction of up to $2,500 for interest paid on student loans used to pay for higher education costs. The interest on student loans is deducted as an adjustment to income, thus the deduction is available regardless of whether the person itemizes deductions. If a taxpayer's filing status is other than married filing separately, the taxpayer is not claimed on another person's tax return. The taxpayer is legally obligated to pay interest on a qualified student loan, and the taxpayer paid interest on a qualified student loan. The taxpayer can claim the student loan interest deduction. If a taxpayer's student debt is forgiven or receives loan repayment help, such benefits may be tax-free if certain conditions are met. If your modified adjusted gross income, MAGI, is between $70,000 and $85,000 for single taxpayers in the 2022 tax year, the amount of your student loan interest deduction will be gradually reduced or phased out. It costs between $145,000 and $175,000 to purchase. At Shore Financial and Tax Services LLC, our team of skilled professionals consisting of licensed and experienced tax consultants, truly believe that each business should receive individualized attention. It is our passion to help your business grow and flourish because we understand that the relationship between an accountant and their client is truly symbiotic.